Tottenham have just received £100 million in investment. But from whom? Is it ENIC, Tavistock, the Lewis family? Well, we're going to take you through all that stuff. And most importantly, how can that money actually be used? What does it mean for our ownership? Does anything change? And what are the pros and cons of this type of investment? We'll also cap it off with why this is happening right now. To help me with all of this, we have two, most importantly, Spurs fans, but also professionals working within finance. How are you, Ben?
Very good. Thank you, Jim. How are you?
Yeah, I'm doing very good, thanks. I'm doing good. And how are you, Nick? You well?
Yeah. Evening, Jim. Good to see you. Thanks for having me.
Oh, always a pleasure to have you both on, guys. Should we start with a quick recap first? There's a number of entities around Tottenham, and when Tottenham receive money, it can be unclear of whether it's a group called Tavistock, whether it's ENIC, or whether it's Tottenham itself, or whether it's a member of the Lewis family. I just wanted to really quickly, guys, cover the differences between Tavistock, ENIC, Tottenham, and the Lewis family, and where this money has actually been put into. If you want to take that bit.
Yeah, I think that's quite a quick one we can whiz through. So Tavistock, they're an investment group. They've got all sorts of investments across the globe. They're quite far removed from Tottenham as an entity because one of their investments is a company called ENIC that used to have different investments around Europe as well. So it had the Sparta Prague, I think, one of the Pragues, and a few other clubs. Now it just has Tottenham, and Tottenham is majority owned by ENIC. So ENIC is the company we focus on because that's the one that directly owns the controlling stake in Spurs. And I think it's up in the high 80% now. And that is the entity that Daniel Levy owns 30% of, and Tavistock, or the Lewises, own the other 70% of.
So ENIC own the majority of Tottenham, and ENIC have invested this money into Tottenham in the form of buying shares. Is that right?
Yeah. Effectively, they're created shares. Yeah. Sorry, I'll let you go for that one, Nick.
No, that's what we're led to believe. So very similar to what ENIC have done in the past in terms of a share rights issue to invest in Tottenham by buying up extra shares.
And why would you buy shares in Tottenham instead of just going and giving them a £100 million check and saying, here you go, Johan Lang, or whoever else in whatever department at Spurs you want to have the money, enjoy, spend as you wish? Why would you, is there a benefit to them buying shares in Tottenham? Does it increase their, because they don't own all of Tottenham, ENIC, right? Is there a reason behind that, do you think?
No, they don't. I mean, as Ben's outlined, we think that, ENIC own roughly about 86% of Tottenham, and that's split. That 86% is split between the Lewis Family Trust and Daniel Levy. So 100 million in terms of shares. So there are various ways that an owner can invest in their football club. The obvious one is that you could do an interest-free loan. So here's some money. Let's say it's 100 million. Let's use this figure of 100 million. There's the form of an interest-free loan that they could just give to the club. Beneficial to the club in the sense that the club then don't have to pay interest back to the owner. They can use that money for various things. The one thing from a PSR perspective that they can't use it for is to offset against debts, or they can only do it up to about 35 million a year. Well, in reality, what that essentially means is you can't have, say, a club goes out and spends 500 million on players, runs up a huge amount of debt that, say, like the debt is 250 million, let's keep it to round numbers, that would put them in breach of PSR. What the owner then can't do is say, right, here's 250 million just to make it a zero loss. We'll just go on from here. That's the sort of rule that UEFA have tried to implement to prevent clubs from doing. I think I've said on some of these pods before, like my personal perspective is that I think capital raising is probably the best form of investment for a football club.
So the one we've just done.
That's the
best
today,
form in your view. Yeah, go on, sorry.
In my view, why is it the best view? So the reasons for that, firstly, is that we've seen that it doesn't get impacted by PSR like an interest-free loan would. The second thing is it's reflecting that the value of the company is increasing. This is really important as well, because it suggests then that the football club have still got some value and it's still continuing to grow from that way. And the third thing is, which I think is important, is that it's better for the owner to have more skin in the game, because I think if an owner is putting up some of their own money to buy some of the shares, yes, they own a greater share, but the fact is that they are essentially backing
They're
themselves to
investing, aren't
say
they?
they're investing, and
Yeah.
they're expecting that investment to increase over a period of time, and they're also backing themselves to say that no, we don't believe we're going to lose money from here. We believe this the investment here is going to continue to grow, and they're going to receive a return on it.
That's such a good point when you look at it that way, because if they said, right, we're going to loan Tottenham £100 million interest free, it would be a bit like getting a mortgage interest free. If the bank says you can have £200,000 to go towards buying your house, whatever it is, and 0% interest on it, just using this oversimplification, you should never get a 0% loan on a mortgage. And you'll pay us back over 30 years, but you're just paying us back exactly £200,000. It's like, okay, that's great. That helps me buy my house. But that's still, in a way, it's less of a risky investment for someone to make, like you're saying, because they're guaranteed to get the money back. You're just basically giving them cash up front to get it back later. Whereas when they're buying shares, there's a mutual interest to get a return by growing that value of those shares. You're buying them for £100 million. Now, they're not obligated to pay you back that £100 million. The only way you're going to get it back is by increasing the value of your shares and then selling them to somebody else, because you've made them more valuable to somebody else. Right? Is that right, Nick? That's what you're saying?
Yeah.
There's no
Sorry, Ben.
downsides to this, is there? There's no tangible downside to the way they've put this money in at all. As you say, if you've taken a loan, there's a downside because you've got to pay it back. If you're, other methods of putting money in, there are downsides to it. And this one, there's no drawbacks. They're basically giving us money. Yeah, we don't care if they own 86% or 87%, it makes no difference to us. But the club gets £100 million that the club didn't have yesterday, and that will, whatever that goes towards, and obviously we'll get onto that. It's £100 million we didn't have, and that can then be used to ease cash flow headaches and all the other stuff we'll get onto.
And to really clarify the PSR that you were touching on there, Nick, an owner can invest and give of their own money up to £35 million a year to cover losses.
That's correct.
People might call it FFP, PSR, basically the financial rules we all have to follow to make the league fair, or whatever reason you believe there. But over 3 years, there's a maximum of 105. So you could do more in year 1 and less in year 3, whatever it is. But over 3 years, it has to be a £105 million maximum. But that's against losses. So that doesn't impact us, because we're not investing £100 million to cover a £100 million loss we made running the club.
That's right. I mean, as we know, from a PSR perspective, Tottenham are in a really healthy position. I mean, it's a bit confusing sometimes, because if you were to look at Tottenham's P&L, sometimes it may show a loss. It doesn't mean that we're losing money. That's just a balance sheet loss. When you can put in things like depreciation, which is around about 68, 69, 70 million, which is just basically the theoretical loss on the value of the assets that we have, i.e. the stadium. And then you add the other things in there, like women's team, which is deductible, we're actually in a pretty good position. So Tottenham wouldn't be doing this to offset any losses. There are some clubs that would be doing that. The obvious one being Chelsea, Aston Villa, some of those, potentially even Newcastle, some of those clubs that have really been sailing close to the wind on that one. So it's an important differentiation, I think, and it's a good point, Jim, just to reflect on that for a moment, that this capital injection is not to cover any losses that Tottenham have made. We're not going to give too much away now, because I'm sure we'll go into what the money might be used for. But essentially, this is something completely different. And that whole concept around, well, surely there's only a maximum of 100 million that an owner can invest over 3 years. In a sense, yes, but that's only to cover losses. And
exactly.
We don't believe that that's what this capital injection is for Tottenham.
And that's the advantage Tottenham have over clubs like Newcastle, as an example. Because their revenues are lower, there's less they can invest before they start investing to offset money they haven't made. So they're more capped by PSR and FFP limits than we are in many ways. It's a bit like the trick we have in making it look like we're making losses when we're not. I guess using real day life would be a bit like saying, I've just financed a £100,000 Range Rover that costs me £2,000 a year on finance or whatever it is. I don't finance a Range Rover, so I don't know. But what I'd say at the end of the year, well, that car became £10,000 less valuable when I drove it off the forecourt. So technically, I lost £10,000, but you didn't spend £10,000 through that. So that's how Spurs do it with their stadium. They're saying, well, technically the stadium lost 70 million quid in value last year because it became another year older, even though it didn't cost us any money. And that's exaggerating the amount of depreciation because we revalue it every year. And we use that to make it look like we're losing money, which is a good thing because it allows us to but display numbers in a way that allow us to have more headroom to spend money and not break these financial rules. Should we jump into how this money can be used? Because I think that's what everyone wants to know, right? Because there's talk of you could use it to pay off a chunk of the stadium debt. You could, help me here, guys, build hotels. You could chuck a lofty bid in for Harry Kane's release clause. Is that right? Do you want to talk us through how it could be used?
Yeah, I think there's also a point around that PSR thing to say in terms of spending. Our problem in the last, well, not problem, but a slight headache the club has had, and we saw this with the Macquarie loan, is cash flow. Yeah, we haven't had cash. So while this doesn't, as you say, increase our PSR headroom, it's injecting cash that we can then use to spend. So you can't inject $1 billion, because if you inject $1 billion and you spend all that, you got £1 billion loss. You could do it, but you'd fall foul of PSR. But you can do it with 100 million or 200 million if you're Spurs, because we have that headroom available. What we didn't have was the cash to allow us the flexibility to do some of the things we want to do. So injecting that cash then allows us to do things like, as you say, there's player spending is going to be the one that excites everyone, but there's also potentially things like covering a bit of the money we do owe this year for players we've already bought. So maybe some of it could go towards that and be earmarked. I'm going the boring ones first, by the way. And there's then maybe, like you say, the hotel. People would grumble at the hotel, but it's not exciting, but it's also not a bad thing, because say they used, I don't know, a quarter of that or a fifth of that to build the rest of the hotel. That is then revenue that's coming in next year and the year after and the year after that can be put towards your football spend, and you don't need to then inject more capital. You're already making that money. It's sustainable revenue is very important. Finishing that hotel and having all of that revenue, 10 million, 20 million a year, come to the club is very beneficial. So it's a good thing no matter what they spend it on, I guess would be my underlying. But what everyone's going to want to know is, how many players can you buy with it? Can you go out and buy Semenyo and Adam Wharton and whoever else? Yeah, Haaland.
Amortization as well is important here, right, guys? Because do you want to take that bit, Nick? Was that you?
Yeah.
Want to take that bit? Yeah.
So I think, right, God, let's not confuse everyone, but I'm really struggling. I never disagree with Ben on these things. It'd be good if we could just say, no, Ben, like I'll do the opposite. But when Ben talks about cash flow, it's so true. So just think about cash flow is almost like your, for those of us that get paid monthly, it's like your monthly salary. The cash comes in, you pay your bills, you might have a bit left over, and then next month you get paid, you pay your bills again, things like that. So we're all quite familiar with the term of cash flow. It's basically the way that we get 12 months worth of, we get 12 lots of payments over the course of a year. Very similar for Tottenham. They'll get this cash over a period of a year. Now, this extra money that we're getting is basically almost like you're getting another. So imagine that instead of getting 12 payments over the year, we actually got 13. So you'd feel pretty good. All of a sudden, great, I've got an extra month's payment. I can do
Almost
something
like getting
with
your
it.
bonus, isn't it? Like getting a big bonus or something.
Exactly. You get your commission because you've made a load of Range Rover sales to a guy called Jim that runs a No So Spurs podcast. And so that's one thing. Cash, like, let's get back on track. That's cash flow. What happens with amortization is, as we know, that when we buy a player, we smooth it over a 5-year horizon period, which is typically the length of a player's contract. I mean, 5 years is now the sort of standard period of time, thanks to Chelsea and the governing bodies having to intervene to cap it at 5 years. So what that means is essentially we can smooth those players over a 5-year period. That adds to like the amortization bill that we carry on the accounts. We think roughly it's around about roughly 130 million at the moment. That's our own estimate based on the players that we've bought and what we've sold. So for every player that we buy, that gets added to a little bit, 1/5 of their transfer value. And actually, as that grows, because we've been on a spending spree, this 100 million extra, may be used to sort of offset some of the additional costs that we've increased for that.
I could definitely not caveat this with all the reasons why it's not quite as simple as this, but in a way, that £100 million allows you to spend £500 million.
Yes,
in a way. I'm just
way.
going to say that to excite people. So technically, what you guys are saying is we can buy Mbappe and Kane now. Is that what you're saying? technically. No,
Buy the shirt
no.
now and get their name on the back, Jim.
No, but obviously it would catch up with you because it's just the way we're displaying the balances. It's not actually our cash flow.
Yeah.
But technically, because if you invested £100 million now, it's amortized over the 5-year contract. So that would allow you to spend £500 million whilst staying within your spend limits.
Yeah,
right?
you're then
So,
going to have that charge every year for the next 5. So your headache would come, like Chelsea, your headache would come in year 2 and 3 and 4 when you haven't got the £100 million injection and you need that
so
£100
you
million
need to invest 100 a year
from
to
somewhere
keep on
else.
top of
Yeah.
it.
Or up your revenue, get into the Champions League every year, up your sponsorship deals, do the stadium, that sort of
Sponsor
thing.
yourself like City. And
Sponsor
just pretend it never
yourself is always an
happened.
option. Yeah. So there's options to do it. But as you say, in theory, on paper, they could go out now and spend, in this financial period, an extra 200, 300 million pounds on players, and you amortize that over the thing. You've only got to come up with, you've only got to come up with 50, 60 million each season. If you can get in the Champions League every year because of those players, that might be the way they're looking at it. You speculate a bit now, you get into the Champions League every year, you get the revenues that follow it up, and maybe in 2 or 3 years' time, you inject a bit more because that's better than chucking in 200-300 million pounds now in this financial period and then having nothing for the next 5. You're better off sort of doing 100 million a couple of years later, another 100 million, because that helps smooth it out.
And worth noting as well, right, that they did specifically say this is more to come, effectively, of investments. So let's just say that implies even if only 50 million of this, half of it is used to go towards players, it could still make a significant difference to our transfer budget. It makes a big difference to our cash flow, liquidity. It could see our net spend change by 100 million in the positive just by having that 50 million. And then next year they go, here's another 50. And it's going to keep that process going. So Spurs go from averaging 120 to 130 million net per season on transfers. It might see them going, well, now we're going to do 180 to 200 million a window for the next 3 seasons.
I thought the language was really encouraging personally. Like you say, the word initial, I think they went out of their way to not just say, by the way, we've injected 100 million. They went out of their way to say, look, this is the initial 100 million. This is more to come. It's they actually said it's going to be to further our ambitions on the pitch. So they didn't need to do any of that. They could have just said, we've injected 100 million to help with the running of the club, and kept it nice and vanilla. Then there's a bit more, people might say, oh, it's for bills they already owe, it's for infrastructure. They were pretty clear, I thought, and there was some doubt a month ago or so when they said they made the change with Daniel Levy and they said, look, we're going to invest some money as well. Some doubt, people said, put your money where your mouth is, we'll see, action's louder than words, and here comes the action. The first 100 million is in. It's a fairly strong statement to go with it. I think it's a lot to be positive about, and there's a lot to sort of think, actually, it does sound like they're going to invest more money than maybe Joe Lewis was willing to do when he was the custodian.
Exciting. Very exciting. God, sorry, Nick.
I suspect, given the way they pitched it and the language they used, is that I rather suspect that it's there to help us both short term and long term. So, like Ben's illustrated, where it can help us out from a long-term perspective. I still think short-term there's a real squeeze on our cash flow because the amount we owe in transfer fees. And the fact is that we haven't really sold many players or sold very well to just keep topping up the money coming in on top of all of the other commercial initiatives that we have. So that would be my sort of inkling that they're probably doing it to help pay for things or to help pay for transfer bills that are upcoming.
Let's not forget, I forget the exact amount, but people will be saying they've already invested, haven't they? Not really. So we had, I think, let's just say it was 50 million. It was a different amount, but just say there was 50 million due to come in for TV rights around October, November time, like now. But we needed the money 6 months ago. So in fact, we went to a company and said, if you give us that 50 million quid, we'll give you 55 million now. If you give us 50 million, no, if you give us, we'll give you 55 million in 6 months if you give us 50 million now. Basically. So we're just swapping when the cash comes in. So as soon as our 50 million quid comes in for that TV rights 6 months later, we give it back. So that wasn't really investment. That was just kind of moving some money around to pay off some stuff.
I think what caused the confusion is that came hot off the heels of them making that statement. They made a statement about investment, and then quite soon after they arranged that thing with Macquarie, that advance, which probably, as you say, probably cost us a couple of million maybe for the pleasure of having the money early. And that confused, sort of muddied the waters a bit, whereas this is actually what those leaks and that statement was referring to, was we're giving the club, not giving, we're buying more shares off the club. And I think I've seen Ali Gold say that their shareholding's gone up to something like 89% now. Now they've sort of, when you recalculate it, so I haven't read the article, but I'll trust it. I'll take his word for that one.
But like Nick, like you were saying, it might just be this is really ironing out the cash flow, making it nice and tidy again, putting us in a healthy position so we can go into the next transfer window with confidence that if we have a target, we're not having to sell before we buy. And we can also increase our budget. Like we said, even if it's 20 million going towards it, that could still make a huge difference of being able to spend an extra 50, 60 million pounds on another player in the January transfer window. So it does make a big difference.
Exactly. And it might, so I've got a friend of mine, Sam, he asked me, does this mean then that we can be more decisive in the window? And if, for example, certain players where it seems like we're spending a while negotiating the structure of the deal and when we pay it and by how much, does this mean we could be far more decisive now and actually go out and spend it without all this quibbling? I'm reluctant to say yes, because I still believe that there is an art to making sure that you get the right value, and B, that you smooth it over a period of time. And there isn't a lot of wiggle room. People believe that there is, but ultimately there's not a lot of wiggle room. And I think this is fairly consistent with what a lot of clubs do. They will often add on lots of kind of clauses to help boost up the actual overall deal that they're getting. So I just want to say to my mate Sam, look, potentially Sam, but let's just wait and see what happens when we are negotiating for players.
I wonder if we'll go down more than because it's going to be a different negotiation structure. Our chairman's not there anymore. There's a level of hierarchy not there. It'll be interesting to see if we go down the model that it's working for Liverpool, it's working for Newcastle, who are doing well in transfers, and working for City, which is, we know we've got money, everyone knows it to spend, but this is how we work. We think the player's worth this, we'll offer it, and we'll offer a fair price. But if you don't want it, we'll just go for someone else. You're not going to get anywhere with us, bending us over a barrel, asking for 5 or 6 here, and just being very decisive on that. Liverpool are probably the best at it, where like with Isak, it was kind of like, we've laid the stall out, the offer's there if you want it. If we find someone in the interim, tough, we'll go for them. And it's just very clear and direct. You can't be bent over that way.
I think you've got to have that discipline, haven't you? I think Man United are a good example of what happens, how it can spiral if you don't. And you constantly hear Man United fans complain every time they go for a player, they get gouged. And that's because you've got a history of overpaying. You pay what they ask for. You'll hold out, like Mbeumo, you held out 12 weeks and you just paid the original asking price. So, you can't there. You're not in a strong position because they know you're going to fold. They know you're going to pay. So it does make a difference. But like you say, we're not the only club that's got cash flow headaches. A lot of clubs have. So the ability to say, all right, you're asking prices, let's say 50 million. What about if we give you 45, but we'll actually give you 30 of that up front, or 20? That's probably an extreme example, but we're going to give you 20 up front. Everyone else is offering 10 up front. That's attractive to clubs. So it does mean you've got a bit more flexibility to maybe offer more attractive payment terms. And it does mean we can move a bit more agilely in the market if we want to. But I agree with Nick. I think anyone expecting us to go out in January and spend 300 million on all sorts of superstars is probably going to be disappointed. I don't think we'll be splashing huge money in January. I think we'll be active like we normally are. And then I think summer it'll allow us the wiggle room to sort of really do our core business.
We do typically spend between 50 and 80 million in January, though. We
sign
shy away
2
from it
players
the last
plus.
3 seasons. Yeah. So
I think as well, you raised a really good point there, Jim. I hadn't really thought of that first, but this probably does allow us to operate more like an apex predator, a bit like how Liverpool have done. I mean, if you look at the way they signed Isak, they knew that they were probably going to get their man. They knew that Newcastle were then going to go out and try and find other players. They showed a bit of interest in FATK, and Liverpool said, "Now you know what, we're going to go for him. No messing about. £90 million. In he comes." Newcastle didn't even stand a chance. So Newcastle probably had to lick their wounds a little bit, and they said, "Look, we've still got the money. We're still going to operate this way." And that, I think, is what is. I'm not saying that we're as big a predator as what Liverpool are, but it just goes to show that if you've got and Lange and his team have got a series of options. So it's not just like they want to go after one player, that they've got a list of A, B, C, D. And it's not first choice, second choice, third choice, because I think that's like language that went out maybe sort of 10 years or so ago. There is a suite of options that, or a menu that our team will go through. And like you said, they will go to one of these clubs and say, "We've got cash. We can go out and buy and we're interested in this player, and this is the terms of which we're willing to offer it. If you don't want that, that's fine. We have other options and we'll pursue those as well." So it's really kind of it's bringing that into sharper focus. These selling clubs then have a decision to make. What should we do now?
Let's not as well overlook the importance to reputation. There was a player Chelsea signed this summer. It might have actually been Siemens before he joined for us, but he said something about, or one of the players anyway said something along the lines of basically other players told them, if you go to Chelsea, you'll win trophies because they'll basically have the ambition to spend whatever's required to get there. And I feel like Spurs, maybe over time, that's a bit of a reputation of being a well-run club, but a slightly more cautious club. You don't go to Tottenham to, instantly be challenging for honours. You go there to join a project. You might challenge for honours if that project goes well. Whereas by being a bit more aggressive, showing these kind of signs of investment and ownership, making those statements of intent when they do it, reputationally, you might have agents of players who previously probably looked at Spurs as thinking we could do a little bit better, going, actually, those guys do mean business now. They actually, they're putting the stall out and saying, I'm not saying this is a 3 to 5 year plan. I'm saying I want silverware now. And we're going to invest to get you there. If you join us, you want to be a part of it. And also, I think it takes away the cautiousness of, can we buy that player and risk not being in the Champions League the season after, like a Forest have done, and a Palace risks doing? If they invest too much, they find themselves in deep trouble if they can't get back into Europe financially. By investing this, it's kind of saying, as long as we're not stupid with that money, we can invest with some confidence that we'd still have cash flow and capital left at the end if we didn't make our goal of requalifying for Europe and having a good season in the league, right? So, like Ben said, there's literally no downside to this. I can't think of any, unless they spend it on something absolutely bizarre.
Yeah, that's the only downside. You spaff it all on terrible players, and then you're left with the bill to pay for them. But as you say, that's a risk. Whether you've had 100 million given to you or not, it's less of a risk if you've got an extra 100 million than it is without it. So it's no downsides.
Yeah, and the wage bill is going to be going up as well. Lots of bumper contracts coming out. More to come.
I think that's going to be, I don't want to use the word interesting because most people probably won't find it interesting, but I think that's going to be very interesting in the next accounts personally, in terms of what our wage bill looks like. So I'm convinced it was as a factor of the part of the stage of the rebuild of the squad process we're in, plus the fact that we weren't in Europe, as of the last account. So all the contracts will have taken a dip automatically anyway, or most of them. So I think those two factors meant it went down. But I was crunching these numbers earlier, and we were, all right, it was 42% wage to revenue at those accounts, but 5-year average was closer to 48%. So I think it was just the bottom of the curve, and we're now going to see it climb again. I think these next accounts and the ones after, we'll see it climbing fairly steadily, I think, and probably fairly sharply.
Yeah, the wage to revenue thing, again, we cover this in other pods, but it's misleading because if you look at the lowest wage to revenue ratios in the league, most of those clubs are the clubs with the most revenue, because you can obviously 40% of 500 million is a lot more competitive than Villa's 95% of 200 million or whatever it was. So we will naturally, as our revenue grows, find ourselves in that bracket of the 40 to 55% mark if you look at our competitors, and kind of staying around there. I'd say 40 is low, probably 45 to 60 is probably more like it. But even Real Madrid, if you take a more extreme example with even more revenue, they rarely go above 50%. So they're not lacking ambition. They're known to be the most ambitious club in world football. Obviously, there's an extreme there. They make a lot more revenue than us, and we could spend more, and historically could have spent more on wages, but it's not as stark as I think it was made out to be in previous windows that we were underspending massively.
And as well, I mean, if you want to have a look at one of our main competitors, I mean, let's just take Arsenal in 2022. Their wages was 206 million versus ours was 209. The following year, in 2023, ours was 251 million and theirs was 235. So they were lagging some way behind us. Theirs only really accelerated once they started hitting regular Champions League football. So as Ben says, we're not the only ones. There's a natural curve to this. And we will see. I mean, next year, I'm confident that we'll see our wages reported go up. Whether that's higher than 42%, we'll wait and see. But that's probably as a consequence of us having a slightly better commercial performance. We can't forget the denominator in this calculation as well. But in absolute terms and absolute value, we'll certainly see our wages go up when we report our accounts in April. And for the current season as well, I think it will be getting back to that 2023 level of 250 million, maybe even higher.
Guys, before we finish, I wanted to ask, if you're still listening to this, you are one of the 33% of people that stick through right to the end. And that's pretty normal across pods and YouTube videos. But that means you are our most important listeners. You're the people who tune in for regularly, and you are keep the show alive. You are everything that we build it around. When we look at the demographics and the data of what content you want, we build it around you, the people still listening right now, not the people who dip in as one-offs at the start. But we need your help a little bit. On the audio pods, for example, if you are watching on YouTube, even listening on audio, if you're watching on YouTube, can you follow us on Spotify or Apple Podcasts, whatever you do? But also give us a review on there, because that helps massively with the algorithm. And I know it's like white noise when people just say this stuff all the time, like smash that like button, all that stuff, but it generally helps so much, if you wouldn't mind. Last time we asked for this, we got a flurry of them, and it was a massive help and boost to us. And if you're on YouTube and that's your thing, and yeah, you just don't normally like a video, but subscribe, it just would help us. But no stress if not. Just thanks for tuning in anyway. Any other topics, guys, before we wrap up today?
Not really a topic, I guess, but just a little bit of a bit of happy clapping for me on the way out was I think we're in a really good. I'm really optimistic about where we are at the moment. I think we've been on a bit of a journey where we got into a bit of a mess, and we've been over it a million times. We're all a bit fuzzy thinking, and the strategy wasn't clear, and we were churning through managers, and recruitment was poor. I think now we've almost completed this actual rebuild of the squad, the first real one we've done since Pochettino arrived. I think we've got a lot of talented young players. I think, they've had a bit of a shake up, a freshen up at the top of the tree. I think as we discussed it, maybe did a lot of good things, but I think fresh ideas might not be a bad thing, modern approach. And the owners, or the new custodians, the new Lewises, are investing money. So I think there's a lot to be positive about at the moment. I don't think there's anything to moan about with this capital injection. I think it sounds like there's more to come. We've got money to spend. We've got a good squad, got a good manager. He started well. So I think things are really looking very positive. And we've finally got a trophy in the bank. So yeah, what's not to like at the moment? So yeah, I'm optimistic.
And I said as well, like when we had the podcast that we did when it was announced that Levy was leaving, one of the things that I said that I wanted for the future is that I wanted the club to speak to me a lot better as a fan. And I would say as well, the tone at which this was pitched sounded very positive. They didn't want to brush anything under the rug. They wanted it up in lights. Look at us, the Lewis Family Trust is investing money in Tottenham. They wanted us to know that they were doing it. They wanted us to know that they were going to continue doing this. And I think that's them trying to be as positive as they can with us and sending a signal, maybe to the market, maybe to us, but I think primarily to us, to say that we mean business and that we want to continue to support this team, and we do take it seriously. And from that perspective, that's exactly what I have asked for. So this is a step in the right direction for me.
Yeah, I agree. There's loads of people. On reflection, I think we've been staunch defenders of the model we were built under through the previous structure with Lewis Senior and Daniel, how they grew the club, created this platform that allows us to invest at 100. Because by the way, without the new stadium and all those investments, we would not be able to invest £100 million and just spend it without breaking PSR. No chance we'd be able to do what we're doing now. So, but equally, we weren't investing as much as we probably could have if we wanted to really push the boat out and what people were asking for. So it was like a two-way thing of, great, you create a platform for us to do it. Can we do it? I don't think we can complain that we're doing it. So yeah, it's the thing everyone asked for. And regardless of whatever you made of the previous ownership or model and stuff, I think it's been healthy to have a fresh start as a fan base and just not have, regardless if you think these are good or bad, it's kind of irrelevant. I think it's just nice to have no skeletons in the closet, old opinions, all that kind of stuff lingering around us, being right, new manager, new set of leadership. We can just enjoy it with a fresh start together. And the money comes in as well. And it's a great time to be a Spurs. It's a good time. It's a good time. Anyway, guys, up the Spurs.
Up the Spurs.